Hi, everyone. Good afternoon. We'll be getting started. We're just going to let a few more folks join the room. We'll be getting started probably in 2 to 3 minutes. So hold tight. Thanks so much for your patience. All right. Well, good afternoon and welcome everyone to our Doc2Doc transition to residency webinar. First off, I just want to say thanks for joining us, taking time out of your day. And also a hearty congratulations on the exciting time of your life that you're facing as you step into your residency program. I'm Josh Lumley. I'm an anesthesiologist from Columbus, Ohio. That's where I practice clinically. I'm also the head of member engagement for Doc2Doc, and I am also the chief quality officer for my private practice group. It's really crazy to think about it, but 20 years ago, to the day, I was in your shoes. I had just graduated from Baylor College of Medicine, was preparing to start my intern year at Baylor in medicine, and then go to my anesthesiology residency in Boston the following year. And I just, while I was super excited, I was also very anxious, and I just kept asking myself in my head, am I ready for this? My first day there, am I going to be ready to take care of the patients on my service? And I know that all of us on this call are either having those feelings or have had those feelings at some point in our career. And that's why we're doing the webinar today. I want everyone to know that we've worked with thousands of doctors that have been in your shoes before, and we hope that the content that we're about to share with all of you is useful and helps to facilitate a smooth transition from medical school or a transitional year or whatever it may be into your residency program. Ultimately, we just want you to know that we've been where you are. We know what you're going through actively, and we're here for you. I've got a few more comments to make, but before we get started, we've got a couple questions that we would like to share to learn a little bit more about you, where you live currently, what you're going into in terms of your specialty, what do you hope to learn from us today, and how'd you hear about us? So Following this, following the presentation, we're going to have a 15-minute period of Q&A. So you'll note at the bottom of the screen, you have the opportunity to submit some questions for us throughout the presentation. We'll do our best to either answer those questions live, or we will answer them at the end of the presentation. So now, without further ado, I would like to introduce my colleague, fellow anesthesiologist, and pain specialist, Dr. Zwade Marshall, who is the CEO of Doc2Doc, and he's going to spend about the next 20 minutes walking you through some tips and tools as you transition into residency. And just, again, please don't hesitate to submit questions in the Q&A section during the presentation. So thank you very much. And Zwade, I'm going to hand it off to you now.
Hello. Good morning, everyone. To your intern year. Now, I know that many of you are likely struggling with the imposter syndrome, the challenges of going from being in a classroom to being in a work environment. And we've rarely had the opportunity to reflect upon financial considerations associated with this transition. First and foremost, you should be proud of the accomplishment of making this step from medical training into residency. And it's one that's fraught with a lot of joys over the course of the next several years. But there are also going to be some areas of stress. And one of the ones that we have found to be very common amongst folks in your position, it's the thought of navigating finances as you go through this transition. So over the course of the next few minutes, we'll share some tips and tools. And after the talk is complete, we'll have our team here to answer questions and to be a resource to guide you through this journey. At Doc2Doc, we've all been there ourselves. We've experienced it too. And we just want to share with you as peers the things that you can use to navigate the process. So by way of disclosure, I'll be honest, I only have 2 licenses, one to practice medicine and one to drive. This presentation is meant to be a friendly informational session, but it's not to be taken as financial advice. So in brief, when I was in the transition period from medical school to residency, I was 26. I went to medical school at Emory in Atlanta, and I'd matched into my top choice for anesthesiology residency at Harvard. As you know, the cost of living in Atlanta compared to Boston is dramatically different. And I needed to borrow just around $17,000 for first, last month's rent and broker fee. I didn't have the money. I already had about $212,000 of student loan debt. My income at Harvard was going to be $13.12 per hour, equivalent of $54,000 a year. And my FICO score was considered to be subprime. It was less than 700. When I applied for loans to cover that cost, I was shocked to realize that the banks viewed me as a high-risk borrower, and they either denied my loan application or they gave me a credit card interest rate. And that whole process felt unfair. And I'm sure that many of you are currently seeing that yourselves right now. So know that the banks just don't understand who we are at this phase in our life, and that life will get a lot better very soon. So over the course of this next few sessions, you're going to learn how to look at your upcoming expenses, how to make budgeting priorities, and how to use financial resources to help you navigate and get through those challenging times. Now, if you compare the lifespan professionally of a physician compared to an electrician, the doctor will earn about 4 times as much money over the course of their lifetime earnings than an electrician will. It's $13.8 million compared to $3.1 million. That's $10 million more on average. But if you look at where we start our careers, the age that we graduate from medical school and residency to really begin to earn, we're several years behind. if you compound the actual student loan debt, in addition to those years of not earning, we're making roughly $15 an hour compared to $26 an hour for that electrician. And so understanding the pressures, the journey, the financial impact that the medical career arc takes on us is going to be important for you to learn how to deploy the tools that we're going to provide you in this session. So it's very important that you plan and manage your finances, and you should be as disciplined, as thoughtful, and as strategic about your financial roadmap as you are about your studies, because those will all matter. And you must look for mentors and opportunities to get stronger in understanding how this works. Now, doctors assume that when they have expenses beyond their savings and included compensation. And if you look through the Doc2Doc portfolio, as we've been lending money now for the last 4 years, with over $100 million in loans going out to students just like you and others, we can tell what the most common uses of money that folks borrow for are. If you're a student like you are, it's oftentimes moving expenses, so paying for that U-Haul truck. It's rental deposits. It's down payments for a home. Oftentimes, life happens. Your car breaks down, so you have to either buy a new one or repair the old one. You're having these monumental life events during the period of time when you're in your mid-20s into your mid-30s. So you're getting married, you're planning honeymoons, you're having the birth of kids. Your spouse may or may not be employed to support you through your training, and that all impacts your need to borrow money sometimes. And the big one is oftentimes credit card debt refinancing. During medical school, most of us are kind of mortgaging our future by swiping our credit card. And over time, that credit card debt accumulates, and it creates a drag on our overall credit profile. So you guys are often needing to borrow money to clean up that expense. Once you're in residency, the types of expenses change a little bit beyond the ones I mentioned before. There's also going to be things like traveling for fellowship research and applying to fellowships and interviewing there. There are the childcare expenses that come with being a busy mom or dad and having to do a lot of clinical work. There's also a relatively new one. It's oocyte cryopreservation. A lot of our female counterparts are preserving their fertility for the future, and they're freezing eggs. That's expensive. And then finally, medical expenses for ourselves and family members. It's having a sick child or spouse and needing to supplement the healthcare costs with additional resources that costs money as well. And then once you're out in practice and you're beginning to earn, folks are still borrowing, but in that instance, it's usually borrowing for growth. It's leveraging capital and using other people's money to grow your current business, your investments, your home improvements, and that's a different conversation that'll be covered in other sections of this course. Now, within our ecosystem at Doc2Doc, we created what we call the TTR Toolkit, the Transition to Residency Toolkit. And in there, you'll find a task checklist, so things for you to be considering, budget planners, and several resource guides. You can use the QR code in the bottom right of the screen here and log in to kind of see the tools that we have prepared for you. Now, think of your saving priorities as the acronym DIRE. Within medicine, we all love acronyms. We use them every day for all number of things from physiology to anatomy. But think of your savings as debt, insurance, retirement, and emergency. And I'll go through each. For debt management, you must always and regularly check your credit report for mistakes. You'll be surprised at how often that credit card bill or the cell phone bill from college that had a $70 balance that you forgot to pay is still showing up in your credit report now, and it's causing you to have a lower score. But there are also sometimes mistakes or just fraud. Identity theft is very, very common these days. And so knowing what's in your credit report by using a free credit monitoring service could help to save you a lot of money and interest, because your credit score will be higher if you correct those mistakes. Avoid penalties. You should at least do an auto pay or a draft, and we'll talk a little bit more about this later, but paying at least the minimum requirement on time. That way you don't have any penalties for late fees or having the FICO score reporting be negative on your profile because you've been making late payments. Look for ways to always consolidate and lower the rate on higher interest loans by paying off the expensive ones first. And then you also want to keep older accounts open to create a longer credit history. And this one's a little bit counterintuitive. Let's say you've got a credit card with a $10,000 limit, and you're currently using $10,000 in the balance. If you borrow the money to pay that loan off to, let's call it to zero, then you've just reduced the amount of debt you have on that card, and it benefits you to keep the card open and have no utilization on it compared to closing the card and not having access to that credit. The point here is credit card debt utilization. Having the ratio of funds available to the funds utilized in that card, keeping that ratio below 30% is very helpful. But you don't want to close the account because then you've got no credit available to you for that ratio to actually matter. So pay it down, keep it open, and ensure that you've got that longer credit history in that card available to you so that it looks better from a credit reporting perspective. Student loan refinancing. This one is quite tricky, and it's a very individualized decision. The benefit of it is that there's one new loan, and so you may have subsidized loans and Pell grants and other financial aid type loans that make up, 7 or 8 different public and private loans that comprise your total student loan burden. If you consolidate into one loan, it's usually going to be one payment, easier to manage, and potentially, just potentially a lower interest rate. Other things to think about, though, would be having the access to a student loan forgiveness program. And so as you think through refinancing your loans, you should be very thoughtful and use the advice of counsel, a financial aid advisor, a loan consultant to help you think about what your career path will be and whether or not it's worthwhile for you to consolidate and potentially lose the benefit of a forgiveness program if you consolidate your debt. Now, student loan refinancing may make sense, may not make sense if you have an income-based repayment plan that's based on a part of your income, so it's a lower payment, not worth you refinancing then. If you're eligible for loan forgiveness, as I mentioned before, by doing a public service or a health shortage area. If your loans are actively in forbearance, where you're not making any payments, it may not be worth it to refinance. Though if the interest rate is high and it's in forbearance, that higher rate is still accruing interest. So that's one you have to think about carefully. And if you've deferred your student loan payments on the basis of a hardship, if you refinance, you'll lose that deferment period and you'll likely have to go into active repayment. So if any of these 4 things are true, you should reconsider and think long and hard about whether or not it's worth it to refinance. Now, you were just in a car accident, you're bedridden for 5 months and require 2 surgeries plus physical therapy. It's really hard to think of this. And we think of the ones that treat patients like this, but it's not happening to us. Know that oftentimes we are capable of being hurt. And you have to think through, how do you cover missed income? How do you care for your loved ones, your dependents? And how do you cover your medical expenses? Well, that's insurance. Think of med-mal insurance, disability insurance, life insurance, and health insurance. Understanding insurance properly will help you save money, but also protects you from the downside worst case scenario that can happen in your life. So you'll estimate how much insurance you'll need based on government requirements and your own needs. And in this realm, your GME office, the Graduate Medical Education Office at your hospital or residency program, will guide you through this process. Also think about having a budget for an emergency fund and contributing to your retirement savings to reduce your dependency on insurance should you become hurt. And you can consider to supplement what your employer provides as needed for additional insurance. These are all considerations that will happen over time, and our toolkit will help you think through this more carefully. Retirement. Retirement should not wait. I know that a part of the reason why you're here today with us is because you're cash strapped. You're thinking about how can I even afford to do all the things I need to do when I move to my new city for residency, and also put money away for retirement. Think about it this way. If there are two people that save $100 a month towards their retirement, and one starts saving 10 years before the other, the early saver will have nearly twice as much saved by the age of 65. And it's not so much how much you put aside, but it's really the discipline and the consistency of knowing that you should put something aside every month. And in many of these residency programs, the employer will match. So they'll put $1 up for every dollar that you personally step aside. So it doubles the impact of that savings account. Emergency funds are the best resource that you never want to use. Think about the fact that you should have 3 to 6 months of after-tax income stored away in some kind of an account that's easily accessible should you have a true emergency. So it's not money that you put in the stock market that you can't liquidate or utilize should you need it. It needs to be in a money market account, a high yield savings account, somewhere where if you needed to use it, you can get access to it within 24 to 48 hours. Think of this pyramid as the financial planning foundation that adds the layers that you need to get to in order to have good financial stability over the course of your career. You are at the level where retirement savings, systematic investing, maximizing tax efficiency, college planning, and accelerated mortgage reduction is in your immediate future. You're not quite there yet, but that's going to be the next kind of financial layer that you'll think about as you're evolving through residency and getting towards your first job. And we'll help to guide you through the elements of each of these in this pyramid over the course of our courses. Now, the average borrower in your position that's applying to Doc2Doc for a loan is borrowing $15,000. And our tips here would be that you should only borrow what you need. If you find that your expenses in your unique situation will cost $7,000, only borrow $7,000. And be thoughtful, though, about anticipating and forecasting any additional needs that you may have so you don't under borrow and need to borrow again in the near term, but you also want to be very responsible about how much you're going to borrow. And you can have the conversation with us and our team members to help you understand where you likely lie in the need for your transition expenses. Now, because we've lived it, because we've done it, and because our team has put together these resources, we have a deep understanding of the unique needs of our physician community. And this makes it better for you. Our product has several features that you'll find to be very attractive. For instance, there are no prepayment penalties. That means that as you begin to moonlight and you graduate through your residency program, at each year, you'll earn more. You may have the ability to pay our loan off faster. We highly encourage and recommend it because you'll save money and interest. So unlike other lenders that'll penalize you for paying our loan off quickly, we encourage it and we give you credit for doing so. We also offer an auto payment discount. So should you enroll in the monthly direct drafting out of your account, you'll get a benefit of a discount on your overall interest payments. Things for you to know about us: we're really tied into our community. We have a match day giveaway. We're launching a Doc2Doc Scholars program. We have Amazon gift cards and bonuses. We want to ensure that you can spread the good word about who we are and how we can help you and your friends. Should you spread that word, you'll be rewarded with a referral bonus for both you and your friend. So welcome to the community, and we hope you're not shy about asking us questions. I'm going to conclude the talk right now, and our team is here to answer any questions in the chat or live over the next few minutes. Again, congrats on the match, and welcome to the Doc2Doc family.
All right. Welcome back. It looks like we only had one question submitted. Are there any other questions that folks had that they would like to have answered? And to the question that was asked, yes, we will send the toolkit and we will send the content of the recording out to the attendees as well. Okay, perfect. So
Hey,
Katie, do you want to
Josh.
handle this one?
Yeah, great. Hi, guys. My name's Katie Miller. I'm the Vice President of Product here at Doc2Doc. There's two different places that we get money from that we lend out. The first is a partner bank that we have that offers us a line of credit. And then also we have a large group of doctors who created a fund to lend money to other doctors. So similar to like a peer-to-peer lending program. So we have doctors who have invested in our company, many who have sat in your shoes as Dr. Marshall and Dr. Lumley did years ago and realized this was a struggle and wanted to support other doctors. So those are the two places that we get money from that we lend out.
Great. Any other questions? All right, well, fabulous. I think everyone does have our contact information, or at least the Doc2Doc email handle, where if you have other questions, you can certainly reach out to us. Again, before we close, we do have a one other poll that my colleague Rebel is going to share before we break. Well, thanks again, everybody, for taking the time on a very busy time of year for everyone who's here to give some time with us and spend some time with us. We look forward to hopefully interacting with you in the future. And again, I hope you found the webinar helpful. And like I said earlier, I wish you a very, very smooth transition to your intern year and to your residency programs. Thanks so much. Have a great rest of your day.